Well, let's focus on another corporate, Cummins India. The company reported a good performance in Q3 that was led by the double-digit revenue growth. To discuss the outlook for the next fiscal, we're now joined by Shweta Arya, the Managing Director at Cummins India, from the sidelines of the Kotak KEI Chasing Growth Conference. Hi, Ms. Arya. Thanks a lot for joining in. Well, let's start off with what is your view on the domestic as well as exports market for the next couple of years? That is 2025, 2026. How do you see things panning out?
For financial year 2025 and for financial year 2026, we expect positive growth in the domestic segment, largely driven by the power generation segment, as well as some of our industrial segments, and continuous growth in the aftermarket. So our anticipation is for financial year ending 2025 and financial year 2026, both the years we anticipate double-digit growth. For exports, the end market demand is still not showing a very clear trend. We have been focusing a lot in improving our channel presence, making sure our products are available. There is reach that we provide through our channel in different markets. So our efforts are continuing in that direction, yet we don't see clear demand trends from each of the different markets that we operate. So it's a mixed bag in terms of anticipation from exports in the coming financial year.
Okay, so you're saying domestic demand is looking robust, but export markets, you're still awaiting some more clarity. Another third quarter was the second quarter after transition to the new emission norms. So have things settled now? How is the overall demand environment for these CPCB 4+ gensets?
So on the ground till December of 2024, CPCB2 inventory was available. There was CPCB4 selling in the market from 1st of July 2024, but there was inventory of CPCB2 available. From January 1st, we will see across the channel in India only CPCB4+ product. So till December, there was very good demand in the lower than 800 kilowatt hour product range, which has moved to the new emission norms of CPCB4+. Now we will see how this plays out. We definitely believe that there is demand in the power generation market in different segments in the ranges where CPCB4+ is applicable.
And what about the order pipeline, Shweta? How is that shaping up? What's the kind of visibility that you have here?
These are not all long-term orders. These are short-term, shorter lead time orders. So we do not have visibility for very long term. But as far as I can talk about today, we have a healthy order board available for the next few months.
Okay, all right. Could you tell us what is the margin trend going forward?
See, our margins, since we play across power generation, in the power generation across the ranges in low horsepower, high horsepower, medium horsepower, and then in the industrial space in segments like rail, defense, marine, oil and gas, and then the aftermarket. So our margin is a blend of all of these different segments. So in every quarter, there could be a slight change in the margins. Our endeavor is to always improve our margins. We work on cost optimization of our products to be able to provide right value to the customer. We work on improving our manufacturing operations, where we can get in more efficiency and more productivity. So our efforts are in that direction. There could be a quarterly difference based on how the mix in our portfolio plays out.
Okay, all right. Well, could you help us out, though, with a margin range at least?
Nothing specific. Our endeavor is to grow profitably so that we manage our margins and bring in even better margin growth or even better profitable growth.
Okay, what about the competitive intensity, Ms. Arya? I mean, how is that shaping up with peers introducing their own products in the market as well? How is the tech being received in the market for these gensets? And are you able to command, say, better premium on your products?
I would say that we are seeing competitive intensity in the market. All our competitors have launched a full range of CPCB4+ product. Like I said, the switchover to CPCB4+ happened July 1st, 2024. There was some channel inventory available till December 2024. So we will now see how competition plays out over this quarter and the next.
Okay, so you're saying that you will see how competition plays out over this quarter and the next. So let's talk about now itself. How are your products in this priced versus the peers? Because both purchase of equipment and, you know, from a lifetime running cost perspective, India is a very competitive market. Do you think this incremental market share would come at the cost of profitability?
We would say that we have been there in the Indian market since 1960s. We have presence, we have a formidable aftermarket presence as well. We also launched, if I were to very specifically speak about the power generation market, we launched our CPCB 4 Plus product on July 1st of 2023. For the whole year of 2023-24, from July 1st, 23 till July 1st, 24, CPCB 2 and CPCB 4 Plus, both products were available. We did sell CPCB 4 Plus products in that time frame, and that gave us a lot of advantage in terms of managing what we call initial teething issues in the product. It helped us improving the quality and reliability of our product. So I would say that definitely gives us an advantage. We were able to see the product performing in the field in that time frame.
All right, Ms. Arya, do you see any threat from BESS, that's battery energy storage systems, and other alternatives as battery costs, they've continued to decline?
In the power backup space, we believe over the longer period of time, batteries could be a possible solution. The way we see it is that our end customers will probably have different energy sources. You can have grid, you could have solar panels, you can have battery. We do see a place for gensets even in that scenario, because for a longer duration of time, providing reliable power is what gensets can do today. We need to see battery prices falling even further, and every day there is research happening in battery technology, battery prices, there are different chemistries available. As we see it today, we see gensets being a part of the overall energy solution for our customers.
Okay, got that. By the way, that's an update, interesting update coming in from BMC here in Mumbai, asking MGL for a lot of these institutions, bakeries, hotels and roadside vendors. I think they have to switch to some clean fuel. We'll try and get more details on this in a minute.
So, you know, a lot of the bakeries in Mumbai, there are around 5,000 or so. All of them were asked to shut operations largely because they were using, so to say, unclean fuel, and that was causing a fair amount of pollution. We have been speaking about, you know, the air quality in Mumbai, etc. And now, with them having asked to shut operations, they've now directed, the BMC has now directed to MGL saying that you have to cater to these guys as well. Is this a big business positive for MGL? Not so much, just a mild positive that, okay, these were the businesses that were affected by the BMC's direction on clean fuel, and now they've been directed, to use fuel from MGL. Yeah. Slightly incremental business positive coming in out there, but this is more environment positive than business positive. The stock has seen a bit of a recovery, but at what cost do they supply to these guys, and do they have the necessary infrastructure to supply to them or not is also the big question. We need to know the timeline and all of that as well.
And I guess a lot of the larger establishments anyway would have been, working on CNG.
So this isn't about
CNG
the larger establishments.
Yeah,
this is about the smaller
small vendors,
the roadside vendors, the roadside
trains,
bakers, the unorganized lot, basically.
Yeah. So anyway, not much of a volume impact over there. But to get back to that conversation with the management of Cummins, Ms. Arya, I just want to go back to the point on exports. You said that, of course, you need more visibility in terms of demand, but there is a recovery that seems to be, visible as of now. So can you tell us which regions are doing well and which geographies are still, so to speak, struggling? What's the outlook?
For exports, it's very difficult to say that here's one geography which will really take off. We have seen in a particular quarter orders coming in from one geography and in the other quarter coming in from another geography. So still the geopolitical situation hasn't stabilized as much, and we are not seeing clear demand trends from one particular geography. Our endeavor is to improve our product availability, make sure we have fit for market products for those end markets where we are selling, and also make sure that we have the right channel partners to be able to sell our products in those end markets.
Since we're speaking about exports, can't take your eyes off what's likely in the US. Do you foresee any impact coming in from Trump's tariff policies on particularly your export business?
We are evaluating this at this point in time. It is a wait and watch situation. Not all tariffs are announced yet. We are evaluating on how it impacts which geography in which way.
All right. And is the best of your margins behind you? And I ask this specifically because you had in the conference call mentioned that, the peak of the gross margins is what you saw in the prior quarter. So the question is whether this sustains or maybe from here on it's only downhill from a margin standpoint.
So gross margins for us are a play of the product mix. Since we are present across various segments in power gen, in industrial, and there's aftermarket, there is a segmental play there and there is a product play there, product mix, which plays across our margins. The margin is a blended margin of all those products. And we believe that there is room for us to improve our margins because there are cost reduction efforts that are ongoing, manufacturing operational efficiencies that we are building in. So we believe that we can improve our margins.
Right.
Okay, you believe that you can improve your margins. Your shareholders will like that. So finally, the big picture questions, FY26, what is the outlook? If you can, leave us even with a band, a guidance band of sorts, revenue. And since you're talking about margin improvement, how much? Is it a rough target you're working with?
For financial year 26, we believe that we will be able to sustain the double-digit growth from a revenue perspective. From a margin perspective, as I mentioned, it is a mix play here based on which product portfolio sells in which segment. And we continue to put in our efforts to improving our margins and delivering profitable growth.
Sure. Okay, and finally, a broader question on the industry. This whole talk about, private capex. Do you see a pickup on the horizon?
We believe that with this budget being announced and 11.2 lakh crores of capital expenditure by the government is trying to draw a balance, in our view, between government capital expenditure and trying to boost private capital expenditure. We haven't seen it happening just yet, but our belief is that it will pick up in this year.
All right, take that point. Thank you, Ms. Arya, for joining in and giving us an outlook into your business on the competitive intensity and the near-term views on exports and the domestic market itself. We wish you good luck at the conference and for your business going forward as well. But just